Yo, what is going on, guys? It is Michael Shear, your second favorite stock options trader, and I have done a video in a long time, so I figured I would get a live stream up, and this is goofy. Oh, hello. All right. So we've been in Chop City for, man, what, 1 week, 2 weeks, 3 weeks, 4 weeks, and we've been down about 6 weeks, so a month and a half down essentially, and Chop City for 3 weeks. Massive volatility. Also, the squeeze indicator, which is one of my favorites, is now trending to the downside in volume and scale per se. As you see, we over the past year, we've almost never been, except for like maybe 2 points, we are a little bit on the downside of trend per se. We've been pretty much just blue for the whole entire year. Obviously, as we've been doing nothing but going up. But as of recently, just some pretty nasty shakedowns in the market with inflation fears, with the Evergrande China fear. What was this back here? This is like election. Whatever was going down closer to the end of the year. And then we had the election, and then we moved on as normal. But we're not really worried about what happened before, because now we are in game mode. Where are we at now? And so not only do I think that we have started our short-term volatility, short-term chop, but also if we go into the technicals and just say, hey, you're making higher lows, lower lows and lower highs as we've been progressing over the past month and a half. Kind of wanted maybe some visuals, make that obvious. Trend line figure. Then maybe you can use the last low from there and kind of say, hey, this is sort of making a trend this way as well. So as you see, we just not cracked above any previous highs as the market is what would cause the market continue to go higher. We are just continually bouncing, and maybe we're gonna start seeing some more lows. And that's the reason I'm making this video, is to talk about what can we do now, because I think that we've been so wrapped up into buy the crap out of dips, because it's been working, but now don't think we're going to be able to let that work any longer, because we're not getting those same rips as we were. Because you'll see, heck, 2 weeks straight of the market down, right back up to the same place, down back to where it was, up to where it was before, down where it was. And then we had, we got out of the inflation scare, we got out of the Evergrande scare, and then we literally today went right back into it. And who knows what's going on right now as far as the markets are concerned. But that doesn't really matter, because we are traders. And the only thing that we're concerned about is how the heck do we make money within this situation. So with the VIX being higher, this is a great time for premium selling, of course. I am going to be looking for lower lows, but I highly doubt that I'm going to be looking for like bearish trading. I'm not going to be trying to get short the market just yet. I think that we just chop for a while. I mean, understandably, and fair as it may sound or may look, take a look at SPY again. We've been doing nothing but going up for 1, 2, 3, 4, 5, 6, 7, 8, 9, essentially 10 months straight. I don't see that we're, until we get past this 200 SMA, it's hard to say that we would be getting into bearish territory where we can safely say it's okay to start making bearish bets against our stocks. Let's take a look at the Qs here, see where they're at. This is your NASDAQ. This is tech stocks. I think this is going to be exactly what happened back in February for tech. It almost looks quite identical. So we had one bounce, drop bounce. It came up, and then we just chop all through March or till the middle of March. So here we are again. One bounce, down bounce, and then we might just chop all through November, or excuse me, October, and then maybe into November, and that's when we might start looking at some longs again. But I mean, I just don't see myself getting heavy long. I'm just going to look for every single time that we have big volatility in the market, anytime the S&P or the NASDAQ here starts making its big down moves. If it does make any more big down moves, I want to be selling the volatility. So looking 30 days out and selling some puts. And so we can kind of use SPY as our evaluator here. So let's just say that S&P is down tomorrow, back to where we were. Volatility starts ripping up. We're getting 5, 6, 7% more volatility inside the market. We can start looking out 30, 39 days out and buying these out of the money puts here. Excuse me. Look in the calls for a second there, and finding value in them. Just even before we get into higher volatility and where we're at right now, we can see that there is quite a bit of value even in these like $30. I mean, where would that even put it? We'll say a 400 strike. It would have to go through 1, 2, 3, 4, 5 months of trading to even get back to a 400. And these are selling for 264 at a 15 delta. So if we were selling these even 5 wide, grabbing 40 cents off of it, and this is without the volatility be higher, I would assume we're going to probably at least see 5 to 10 more cents. We can get 50 cents. That's 10% on our money, or on our capital, for 30 days out on something that has a very extremely low probability of happening. And I think that we could also do that same thing for our favorite stocks. You know, I would say like it's our Apple. If anybody's really heavily trades Apple, I mean, we've been riding the crap out of this 200 SMA. And if we get down here into this 200 SMA and we can start selling puts down here, the 130, maybe even the 125s. Say, let's see what they look like 30 days out. I have leaps in here, so I'm selling the calls against my leaps. So if you see the position here, let's say that we're looking at Apple here 30 days out. Let's say tomorrow's that it just rips down to the 200 SMA. I highly doubt it. It might get down to the 140. But let's just say the 130s, 125s. The 130, the 125 is selling for roughly $1.50. Let's just say we grab the 130s, sell the 130, and we do a 5 wide again. We're already getting 50 cents. And obviously it would be more than that if it was $5 lower. So we'll just use this as an example, assuming and acting as if 140 and 135 will be. So we could actually sell those 130, 135s, or excuse me, 135, 130s for about $1.50 if it was down $5 more. So if it did get down here to 135 range, we could sell the 130, the 135 and the 130s for about $1.50 30 days out. That'd be playing it really, really tight. But when's the last time that our 200 SMA has been broken? Yeah, it might have breached for a second here or there, gave us a whole scare for 10, 15 days, but it never breached it completely. So we have to assume that we're going to stay in this uptrend, although maybe trending sideways. So that's a good look at that. And then obviously, if you didn't want to be super, super close to the money, you could assume the same thing. Hey, if we're down $5 more, we could grab the 130, 125 for about $1, assuming all things stay the same. We go down $5, we have to look at the numbers that would be $5. So we're getting roughly 90 cents on a 5 wide spread. And we're playing it safe by selling the 130, buying the 125. And then we have a $5 range here. And assuming all things stay the same and we stay in the uptrend or at least sideways vibrations, we'll still make money with the theta decay in place 30 days out. And if Apple does start to do its little trend back up, hey, even better, we can hold on to our position all the way to expiration, make the entire 90 cents. Take a look at a couple more, and then I'm going to see what I'm doing in my positions. Just good to talk about it, and then what has been happening in my account as well. As we know, I stopped posting a lot, just due to one, having a whole entire family, and then two, kind of being sad about what's been happening in this roller coaster ride, and not wanting to give off a whole bunch of bad information while I was trading to get myself back into a good position. So Microsoft has been probably one of the stronger ones inside of this scenario. I mean, although we've been down, it never really, it's not been close. It's been just kind of chugging along, going up still. It's in a great position. So this would probably be one of the better ones, stronger stock that's looking like it's staying above water, even better than Apple is. Apple hasn't even been near its highs. It kind of below those last 2 months of trading. Microsoft's a little bit stronger. I don't really care for Intel. Haven't been trading it much. It's, man, what a, they can't trade this really. Can't really trade this. Too scared to get into the earnings plays because the last two earnings, I mean, if it's been sideways forever, that means volatility is kind of low. That means we can't get a lot of premium. And so if we can't get a lot of premium, we got to get close to the money. Closer we are to the money during earnings times is dangerous. I don't want to be that close. I'm going to be doing anything with Intel coming up into, let's see, it's got 10 days away from earnings. I'm just going to stay away from that. Plus, it's below the 200 SMA. And we see here we've been really waving in and out of the SMA, the 200 SMA. It's kind of a dangerous stock right now to be messing around with, especially as far as selling premium. Shopify, and this one's been kind of fun, honestly. Haven't had a trade in a while. This one could be one of the ones that we start looking at. Hey, maybe if it does bounce, we could start selling some call credit spreads here. I'd be cautious on anything selling puts, because it just looks like we could just easily just kind of float below this 200 SMA, start getting down into the 1,200 range. So maybe selling some weekly calls or 2 weeks out calls on that, and you still get a lot of money in it just because this is such a high dollar valued stock. It's easy to get a lot of premium in it just because of the nature of higher dollar valued stocks. Let's kind of take a look at it so you could see what I'm talking about. So even 2 weeks out, let's say something that we don't think is going to hit 15,500. 5 wide, 40 cents. Not the greatest, but you see the idea. $3, and we are 150 points away, and still selling for $3. And let's say that was something like it was Apple. We don't get those same dollar values that far out. 2 weeks out, same time frame, Apple, but this time looking at it from what we were getting on Shop, I mean, we're not even close. We have to be at a $4 away. That's a bad example. $5 wide, we're getting $1. That's actually pretty decent, but we're super close. We're at the 34 delta. 34 delta, and on Shop we are on the 8 delta. I mean, 8% chance to go into the money, make 50 cents, or 34% chance of going in the money and making $1. So you're increasing your risk by 25% to make 50 cents more, and the odds of Apple going up $5 is a lot more than Shopify moving 150 points. So that's kind of the idea on bigger stock values compared to those lower stock values, and how much further out you can go and create a premium selling strategy that still will pull in pretty significant money compared to lower valued stock bringing in a lot less. Let's look at our friend Tesla. Tesla's been a beast. I have been really just cannot figure out Tesla. Haven't been really trading it much because it's although it looks like it's just going up, the volatility is so high in Tesla. Implied volatility is 61%. And so if you try and trade it like 2 or 3 weeks out, you're losing so much premium just in theta decay and in volatility and vega decay that it almost makes it impossible to hold long, especially whenever Tesla has to move 15 points for you to even really start making any money on it in the first place. It's really been a very difficult stock to trade because it's not moving as big and as bad as you want it to at all times. And it's really been struggling at this $800 value for about 2.5 weeks. Really just can't do much with this $800 value. I think it was here that I got in, lost like 1,000. And I was like, man, that really sucks, because I thought it was gonna gap up and break, but it gapped up, broke, and just slammed down 20, 25 points down. Got absolutely murdered in that trade. And then here we are again. We're still uptrending, so that's a good sign. But again, broke that $800 mark and fell right back. It does not want to break that. So I assume, hopefully, maybe, once we really clearly break that $800 mark, there may be a big shot up. But as you see, even back whenever it did this, that massive move before, when a lot of people were making a lot of money, this 800 to 900 range was just chop city, and there's no reason to believe that it would be anything more once we break it again here. So maybe we break it, we go up 50 points, and then we go down 50 points the next. So I think Tesla is just going to be such a extremely hard stock to trade. But for those that are maybe day trading, might see some value there, but it's going to be very difficult because the volatility is so high. Theta decay is so quick, and Vega decay is extremely quick as well when you're talking about a stock at 61% implied volatility. All right, so let's take a look at some of the trades I have on. I placed a lot, had a lot going on today. I was getting in Baba short. I think at first I thought I was overextending on Baba. Like, man, hey, here we go. I was trying to play in the trend. I wanted something short, tired of being long in this market. Didn't feel like playing anything long. I seen that gap up here. I actually got short on this day, short again on this day, and I'm like, oh my god, did it really gap up again today? But I seen that gap up and it immediately went down. Let me show you that on the screen here. So we had this big gap up in the morning time, and the first 5-10 minutes just sold it all off. I was like, okay, that's it. It's gonna be the last time I go short on this thing. I grabbed on this bounce here. I grabbed about 3 to 6 contracts of puts, and I actually sold. I actually wanted this thing to go lower. I thought we were gonna start seeing like a gap fill today. I thought I was just gonna absolutely get a major day trade killed here, but you know, $300 is what I made off of this trade. So it went down 5, 10. Started seeing this little here. These 15 minutes, I started seeing it just kind of like just playing sideways. And whenever you're falling like this, and it's usually the second bounce that the first bounce, and then you just like boom all day long, and you step down. But I started seeing it like down, and it came up, and it almost touched it, and it went back down, and it started doing this little bounce thing here right at that last green candle bounce before, and I did not want to get sucked out on this move. I kind of figured this move was coming. I sold here, literally sold that very bottom. Now it obviously kind of went sideways and then tailed off for the day. So I'm hoping to see continuation of that coming into tomorrow, because I'm pretty deep in. I got about 2,000 short in it. I'm looking for it to at least come back into the 140 range and hopefully make some lower lows. I got about 6 more contracts, 30 days out. Let me look at here, see what we got. So I got the next week's short that. I got it at about 325. I got these. I'm about $1.50 up on each of these 3 contracts here. Probably will close them tomorrow if we fill the gap. Those are just kind of like mini day trades. Let's see, 3 weeks out. I sold a call spread on that. 3 weeks out, trying to just get the premium out of that. And these are my actual swing trades going short. I think I'm 6 contracts deep here. 3, 6, yeah. So these are my longer holds. This is the one I'm wanting to see it hit 140, and I'll close it immediately. I got them, I think it was about $2.75 a piece. Let me see here, what were they? Oh, $3 a piece. And so if we can get back to 140, they should be worth roughly, let's say $5.50 to $7 a piece, and we will see a really nice double there. And if I'm in for 2,000, roughly another $2,000 win if we can get back down to 140. And that's just that one trade alone. I still think that Baba's super weak with all the China news and all the worries out there. I think there's no reason to think that this downtrend we are seeing is going to now break out and begin an uptrend. So I am happily in this. We're underneath the 200 SMA. All the moving averages are still stacked downwards. Hoping for more onward action. Hopefully a big, massive gap down. That'd be fantastic. Tomorrow, if we could drop down 20 points tomorrow, I would be happy as could be. All right, guys, thank you so much. I just wanted to kind of come back out, give a brief talk about what I've had going on. I am short the S&P as well, so I got a calendar. I put calendar spread on for this week. Let me show you what that looks like on the Analyze tab. I'm hoping that we hit somewhere between the 4,300 and 4,340 range, 4,300 to 4,340, and I will see some decent profits there. It's not nearly as big of a trade as my Baba trade is. So if we see some downward action between here, like a little box drawing tool, if we get some downward action between 4,340 and 4,300, this is where I start making a little bit of profit. It's about a $1,000 trade, and I'm looking to make about 15% on it. So I'm hoping to see about $200 on this trade. If we can, obviously, just tomorrow alone, if it goes down 20 to 30 points, kind of like it did today, we will see those profits, and I'll just take that trade off. Call it a day. And that's what I expect. Get right back into this little chop zone, as it has been for the past 2 weeks, and make money in that way. That's what I'm looking for. And then I'm going to go into cash, see what happens. If we start breaking down even further, that's whenever I'm going to be looking to, again, like I was talking about before, this volatility is going to rip up. The VIX is going to go start spiking up. And that's when it's time to start. If we start hitting 24s again, 24, 25, I want to start selling premium. I want to sell premium in the S&P, go like way out. And I will see here. I probably could even sell right at the 200 SMA line. I'll sell the 4150s, 4100s, because there's no reason to believe that it will go lower than that within a week or two, and it's just going to bounce, and I'm going to make all my money back. It's going to be, 50 cents to $1 there, here and there, but it will almost be quote unquote easy money, I believe. So, all right, again, sorry for me rambling on there at the end. I just wanted to just really go back and talk about what I'm seeing in the market. I think we're just choppy to bearish. I have no reason to see anything long. So if you're getting long on any stock, the only one I would see getting long is Microsoft. It's the only one that's still kind of in an uptrend-ish. Everything else, I mean, just looks absolutely horrible. No reason to get super long anything at this moment, unless it is one of your other favorite stocks that is not a large cap, because large caps move with the entire market. They're very intertwined with large markets, such as the S&P 500. Tesla, I don't see any reason, although it's in an uptrend, I don't see any reason for it to be making huge moves either way. Amazon, same thing. I mean, look at this chop fest that Amazon's been in for all year long. It's not really uptrending. It's going sideways, although we see a roller coaster here. So it's almost impossible to trade that. Maybe some put credit spreads if we start getting back into this line that I have drawn here at 32.25. Again, there's no reason to be long this market right now until further notice, until all the scare is away. Maybe around Christmas time, we can start looking at Apple and Microsoft again, and our favorite stocks as they come into Christmas time and the supply chain shortages. Man, it's gonna be a tough Christmas, I think. Even although I know these companies are well aware of what's going on, I man, if we still have these fears, inflation and interest rates being stupid low, which is actually should be really good for the market. But if there's supply chain shortages, they just can't buy stuff. They can't buy enough stuff. They can't sell enough stuff. They're not making enough revenue. And we probably just go sideways until further notice. And yeah, that's it. All right. Thank you guys for staying on. Appreciate you all if you stayed on for the entire length of this segment here of me showing what I am seeing in the market. If you're seeing anything different, go ahead and leave me a comment. Tell me what you're in down below, and I will see you guys next time.